Welcome to another video on the Daily Grind.
Today, we are diving deep into the fascinating world of stocks. Buckle up, because we're about to embark on a thrilling journey of financial empowerment. What if I told you that there's a way to potentially grow your wealth, participate in the success of renowned companies, and even generate passive income? Well, my friends, that's exactly what stocks can offer you. But first, here are some key terminologies that are going to be used in this video. Liquidation of a company refers to the process of winding up its affairs, selling its assets, and distributing the proceeds among its creditors and shareholders. It typically occurs when a company is unable to meet its financial obligations and is deemed insolvent. An asset is a resource with economic value that an individual, company, or organization owns or controls with the expectation that it will provide future benefits. Simply, it backquote as something that makes you money. Stocks represent ownership in a company, granting you a share of its profits and assets. They come in different types, each with its unique features and benefits. Let's explore them. First up, we have common stocks. These are the most common type of stocks you'll encounter. By owning common stocks, you become a partial owner of the company and get to vote on important decisions at shareholder meetings. You also have the potential to receive dividends, which are a share of the company's profits. Examples of companies that offer common stocks are Apple Inc., Amazon.com, Inc., the Coca-Cola Company and Netflix, Inc. But wait, there's more. Introducing preferred stocks. These beauties come with additional perks. Preferred stockholders have a higher claim on company earnings and assets, which means they receive dividends before common stockholders. Plus, in the event of liquidation, preferred stockholders have priority over common stockholders when it comes to getting their investment back. Examples of companies that offer preferred stocks are Bank of America Corporation, J.P. Morgan Chase & Company, and Ford Motor Company. Now, let's talk about growth stocks and value stocks. Growth stocks belong to companies with significant potential for future expansion and higher earnings. These stocks may not pay dividends initially, but their value can skyrocket over time. On the other hand, value stocks are shares of companies that the market has undervalued. They offer stable dividends and have the potential for future growth as their true value is recognized. Examples of companies that offer growth stocks are Amazon.com, Inc., Alphabet Inc., Tesla, Inc., Facebook, Inc., Netflix, Inc. But don't limit yourself to just one type of stock. A well-diversified portfolio combines different types of stocks to balance risk and maximize potential returns. It's like having a mix of superheroes in your investment squad, each with their own superpowers. Now, let me share a secret with you. Thanks to technology, investing in stocks has never been easier. With just a few taps on your smartphone, you can buy and sell stocks, monitor your investments, and access an abundance of financial information. It's like having a stock market at your fingertips. Here are some examples of apps where you can buy stocks: Robinhood, Fidelity, and Charles Schwab. Imagine the thrill of being a part owner of companies like Google, Apple, or Amazon. By investing in stocks, you can ride the wave of their success and potentially reap the rewards. But remember, my fellow investors, knowledge is power. Educate yourself, stay informed, and consult with financial advisors before making any investment decisions. The stock market is full of opportunities, but it also carries risks. So, arm yourself with knowledge and dive in with caution. That's a wrap for today's exhilarating episode on stocks.
I hope you've been inspired to unlock the power of stocks and start your journey towards financial freedom.
Stay tuned for more exciting videos. Oh, and don't forget to hit that bell, like and subscribe.